Are you nervous about the Portland real estate market? Well, there's probably good reason to be, and you are in the right place. It's time for the very latest in stats and trends for the Portland residential real estate market. If this is the first time you're catching one of these reports, the stats and trends that I'm going to go over are for my sample of residential real estate sales in Southwest Washington, Portland, and all the surrounding communities. So let's get started. The average sale price in Portland Metro had a pretty strong showing this week. It was up about 4% from the previous week and landed about 4.4% higher than last year at this time. And those stats are in line with what we've been tracking for our recent year-over-year numbers. Next up is demand. The number of purchase agreements signed by buyers and sellers was down from last week by about 16%. We did have a surprisingly strong number last week, so I wouldn't worry too much about that considerable drop, at least not yet. The 618 new purchase agreements we ended up with is a number that's in the range that we've been seeing this spring, but it is on the lower end of that range. That being said, our current buyer demand is still outpacing last year for about the fifth week straight now. So on to supply. We've been seeing the supply of homes for buyers to purchase continue to grow. That's normal. We should probably see this number grow until the end of summer. If you have been following these reports, then you know that there are a lot more homes for buyers to choose from this year compared to last year. But that gap has been shrinking. 3 weeks ago, the difference was around 44%. That is, buyers had 44% more homes to choose from this year compared to last year. 2 weeks ago, that was down to 37%, and this last week it was down to 32%. It was a bit of a slow start this season, but demand right now seems to be biting into our supply of homes, at least for now. We did see a big jump in the number of homes hitting the for sale market this last week, but that is coming off of a holiday week with relatively low activity, so I'm not surprised to see a little bit of catch up. What is important to note is that the number of homes that did hit the market this week was pretty much the same that we saw last year. So on to mortgage rates. Mortgage rates were surprising this week. After some payroll and jobs and manufacturing reports, we saw a steady drop in the yield on the 10-year Treasury, which is one of our best indicators of where mortgage rates are headed. And of course, mortgage rates followed suit. The 30-year fixed mortgage started out the week with a best case scenario of about 6.625%, and it ended the week down about a quarter of a percentage point to 6.375. Keep in mind that these rates are the best that I could find advertised, and most lenders are likely still in the high sixes. Looking ahead, the Fed board is meeting this next week, but they're not expected to make any changes in interest rates, plus or minus. The consensus seems to be at the moment that that may be coming in August, a small rate reduction at that time. We're also waiting for the May jobs report at the end of this week, which could push rates in one way or the other direction. If I do have updates before I publish this video on Friday, I'll put them right up here. Well, you made it through the report. Thank you so much for watching to the very end. Don't forget to subscribe and follow this channel to stay updated and ahead of the curve. Be sure to hit that like button and share this video with anyone who might need a little extra insight. Enjoy the fantastic weather this weekend, and I will see you right here next week.